we're moving on now to our panel discussion, focusing on the outlook for lithium and battery metals more broadly across the industry. And I'd like to invite our panelists to the stage, who I think are probably outside the room conferring right now, but hopefully they can hear me. But Amanda, of course, you're joining us up on this panel as well anyway, so I'll invite you to come up and...
That's okay. I'll do the panel. Yeah, I did say that.
We had a quickie.
Okay. And as always, we have set the stage for people who are wearing trousers. So did you want me to answer any questions? Are these turned on?
They are, they should be coming up. Hello, hello.
No, but certainly the fact that we've got to change the government for the first time since running the office is challenging. But the population is enthusiastic.
Okay, so thank you, Amanda, for that presentation. And I guess if there's any questions that followed on from that, we can field them in this panel. So we're going to be looking at the global outlook on lithium and the battery metals driving the mining industry, or so we're assuming. I think we're going to jump around a little bit because battery metals covers a broad class of commodities, but we have a lot of expertise up here covering all of those. So I think we're going to get quite a good bit of coverage, but we might just jump around as the questions go along. But first, I'd like to start with lithium, as we titled it that, and want to get a sort of idea of where the lithium market stands at the moment, and really in 2017. I believe the lithium market was reported to be in balance. We had a good presentation and some coverage of this at the London show we did last month. Chris, perhaps I could start with you and just get your take on where you think...
May I just say one thing? I have sciatica that's killing me. You older guys understand that. Sorry, I'm going to stand.
I don't know if you can use lithium to help cure that, maybe. I'll have to look into it. There's a pharmaceutical component here. No, the lithium market has been, at least from my perspective, over the last year, much stronger than I had expected it to be. The demand continues to impress to the upside. It seems like every day there's another OEM, there's another downstream user that is having trouble even just sourcing lithium. And so, the demand side, from my perspective, is settled. Whether or not we're talking about an 800,000 ton, a million ton market in 2025 or 2027, that seems to be settled. We know that the bearish case for lithium demand out over the next, say, 7 to 10 years is for a tripling in size. So, with that, then you turn around and you say, okay, well, what about the supply? And that's, of course, why the market continues to be tight. You're seeing contract prices in the $14,000 to $16,000 a ton range for battery-grade material, much higher in the spot market in China, although that's a much smaller market in terms of actual volumes sold. But, the challenge is you need to bring the equivalent of sort of 1 to 1.5 lithium mines, about 35,000 tons per year, on stream between now and 2027 just to keep the market in balance. And so the challenge is, where will the capital come from? We just saw Nemaska get financed to the tune of $1 billion. That's a great success story. I think, unfortunately for them now, the fun begins because they actually have to build this thing and produce battery-grade material for their offtake partners. So of the battery metals, when you think about lithium and cobalt and graphite, I'm probably still the most bullish about lithium. It's been a great run. I do see lower prices over the next 3 to 5 years, perhaps $12,000 to $13,000 a ton for battery-grade material, because there will be a supply response predominantly from the majors, but it's going to keep the markets tight for at least the next 3 years. So it's going to be a very interesting place to be as the supply chain evolves.
Excellent. Livio, I'd like to bring you in here. Perhaps you could just start by telling us a little bit about your role with Mercedes-Benz Daimler, and bringing in that sort of angle from the automotive company, and then perhaps some of your coverage on lithium as well, whether you're you're agreeing with Chris on the supply-demand fundamentals there.
Sure. So my background is in renewable energies and clean technologies. I spent the past 8 years in developing energy storage markets here in North America for companies. Right now I'm with Mercedes-Benz Energy. Before that I was with number one system integrator called Sonnen Battery and some other companies as well. Yeah, so as an automotive company, we are building for automotive grade lithium battery facilities from Germany to China. Our first electric vehicle is going to be introduced next year in North America. We're building a facility in Alabama. And so going back to the market being balanced and all of that, I think from a high level, as Chris just mentioned, like the lithium chemical prices are still strong. We're seeing a lot of capital still flow back into the market. I think just over the past, like it seems like almost as Chris mentioned, on a weekly basis, there seems to be some type of OEM partnering up with a lithium producer or an explorer. We've seen Tesla partner up with Kinmen out of Australia. There was a trading house out of Japan that just signed a deal with a company out of Mexico. So lots of deal flows are happening, which obviously indicates that the market's remaining unbalanced. And then specifically on the battery module manufacturing side, there's a clear shortage in the market. So, you know, dealing with companies like LG Chem, for example, when you look at their production plans, you know, it's 18 months out. So these big battery manufacturers are building based on expected demand and purchase orders, which is pushed out 18 months. So yeah, I can't really say like what's specifically happening in the lithium chemical side, but on the battery module manufacturing side of the business, there's a clear shortage. And then how that impacts both the availability of battery modules to support electric vehicle production, it becomes interesting. And if you look at Tesla, for example, and all of their stuff is public, right now, I mean, they have battery manufacturing capabilities for about 30 gigawatts in North America. 30 gigawatt hours translates into about, I don't know, 400,000 vehicles. If they hit their targets of 250,000 Model S's, and then they increase the Model X as well, and they also are doing about 1 gigawatt hour of stationary energy storage systems, then they're quickly going to hit their 30 gigawatt hours. So I think it's interesting to watch, not necessarily what's happening on the lithium chemical side, but what's happening on the battery side, because if there isn't enough battery manufacturing capacity coming into the market, that's where the bottleneck is going to be.
Okay. And sorry, Murthy, I'd like to bring you in here as sort of on the investment side. There was a comment around sort of where's the capital going to come from? Do you echo the sort of sentiments of these guys on the supply-demand fundamentals, and can you give us sort of investors' perspective on where these mines are going to get that funding?
Good morning, everyone. My name is Murthy Nooni from Marshall Funds. We are a renewable energy investor, particularly developing projects in Asia at the moment, wind and solar projects. From the battery materials point of view, the demand is obviously arising from EV vehicles. Looking at the demand for EV vehicles, we have about 1 million cars produced at the moment on the EV side. That is expected to go up to about 14-15 million by 2025, according to various estimates. But the higher estimate is at as much as 25 million, which could be about 20 to 25% of the total vehicle market. So this obviously has to be catered to. So there is significant growth in the EV vehicle manufacture for a number of years. So the demand is obviously very high. The prices for both lithium as well as cobalt have been extremely strong for the last 3-4 years. That also provides a huge amount of incentive for putting up new capacity, and that is happening in a big way. Most of the investment is now coming from the big manufacturers, big mining companies. Glencore is controlling a lot of cobalt capacity in DRC as well. The Chinese are controlling a lot of capacity. So a lot of the investment is coming from there. So we are seeing a huge amount of capacity build up for the next 3-4 years. But what one has to be careful about is the dynamics can change quite significantly because the battery manufacturers are interested in trying to reduce cost as well as increase efficiencies. So when you're looking at about 14 times or 15 times increase in EV manufacturing, you're not actually going to have 14 times increase in the battery requirement. So according to the estimates, it's more like 100 gigawatt hour today requirement, which with 14 times, you're going to have about 10 times increase in the battery required to about 1,000 gigawatt hours. But this is expected to result in not 10 times increase in cobalt, but 5 times increase. The numbers I've heard are like 3 to 4 times increase in cobalt requirement because everyone is moving towards cobalt light batteries. So reducing the requirement of cobalt because that's the most expensive one. That's also volatile for pricing. And also at the same time, even lithium, they're talking about 5-fold increase in demand, not 10-fold increase in demand. So these are some of the things that the investors will have to keep in mind in forecasting significant increase in demand. It's not going to be 14 times, it's not going to be 10 times, it's more like 5 times and 3 times. So that's something to think about.
Okay. Does anyone care to comment on that sort of battery mix and the way that things are evolving at all?
Yeah, I'll just maybe add just a couple of comments. On the cobalt side, when you look at global cobalt production today and you look at every single mine, almost all of which produce cobalt as a byproduct, the typical production on a yearly basis of cobalt from any of these mines is around 3,000 tons per year. Okay, this is a 120,000 ton a year market. When you take Glencore and now China Molybdenum out of that equation, the typical cobalt production falls to about 1,600 tons per year. Okay, so to Livio's point and Murthy's point, you've got these OEMs, these downstream players, all of whom have huge ambitions in terms of sourcing cobalt and lithium and some of these other metals. And the problem that I think you're having, and you're seeing now in the price, is the fact that the mines just don't produce enough. And so that's one of the real challenges. That's why I think, the move, Murthy, to your point about a lower cobalt-intense battery is going to happen, and it's probably going to happen sooner than we think. Because if we really want to have, a China that electrifies, the U.S. that electrifies, et cetera, the only way is going to be able to do that is to sustainably source these raw materials, and it just can't happen on the cobalt side.
I'd like to say something. I listen often to the narrative on electric vehicles, and it's quite simplistic. And actually, my background, I'm a miner, I'm a marketer by trade. Consumers rarely actually take leaps in terms of technology adoption. What they do is that they tend to actually take steps. And so a lot of the discussion around batteries, people talk about battery electric vehicles. There are many steps that consumers will take before they get to there. And our view is that they will actually move through hybrid, plug hybrid, and ultimately into the battery electric vehicle. So in terms of thinking about demand and how it grows and how quickly that demand will come to market, it is really important to recognise that there is a transition here, not a sudden leap. And I worked in technology for a lot of times, and technologists sort of look at you and they say, but it's a better technology, why don't they actually use it? And, consumers sometimes are a bit stubborn like that. Think about Beta and VHS. So I think that's one point. And the other thing, because I am here to speak about rare earths as well, is to identify that there are many parts of the technology that interplay. So, for example, the powertrain in an electric vehicle can be based upon rare earths, it can be an induction motor, it can be an externally excited motor, that's my favourite, no it's not. But there are a variety of different options. If you choose a rare earths permanent magnet, your motor will be more efficient, you need a smaller battery, your efficiency in your vehicle over time will be much greater. So I think that understanding that there are a variety of different technologies at play, which actually all will interface with each other is quite important as you're thinking about an investment thesis in these areas. And my final point that I'd just like to say also is, I know people will tell you, but they have to have my product. I can tell you this. There is always a functional equivalent, and if there's not, there's someone working on finding one.
Thanks. Jack, you've spent a long time in the automotive industry advising many different roles and obviously expert on EVs and rare earths as well. What's your thoughts on this picture?
What intrigues me here about all of this is that I don't think most of you realize there's 1.3 billion motor vehicles for personal use and freight on the road in the world, of which 25% are in North America, okay? Now, when you tell me 1% penetration, 13 million, why there haven't been 13 million electrified vehicles built altogether since Thomas Edison built one for Henry Ford's wife. So we're a long way from there. I'm going to tell you something else. Since I haven't got any friends anyway, none of you has any idea what it takes to build a car. You know, General Motors invested $3 billion to design the Volt and bring it into production. I happen to live 10 miles from that factory, and I remember when they did it. And so when we read there's going to be 20 Daimler models, 18 at the moment, and 10 Ford and this and that, the amount of investment for engineering the car is enormous. Now, why am I pointing that out? Because you can't tell me if I can get enough cobalt in 3 years to produce the Hyundai Salami or whatever it's going to be called, okay? So you know what I do? I cancel the Salami because I can't afford the 90% of the cost to bring it to market if that 10% battery isn't there. Daimler just did this yesterday. They announced delay on 2 electric models. Why? They said they can't get batteries. As a Detroiter, a supplier now for 40 years, I can tell you, nobody ever makes such an announcement. We're coming out with a new model. They never say it's delayed unless they're Tesla. They never. So this means that a whole lot of people have been discharged from Daimler purchasing, and a whole lot of analysts are on the street, okay? What I'm saying to you, it's going to take a very long time for the industry to change over to electric. The one thing I don't hear about is profit. You know that there's never been an electrified vehicle sold yet that was profitable without a subsidy. Now, are you going to keep paying the subsidy? I doubt it. So they've got to be profitable with cost. Cobalt cannot keep going up. It's a significant cost in building a battery, okay? Lithium is actually, in case you don't know it, metallic lithium is more expensive than cobalt. But I don't think it's gonna really go up very much. And so we're looking at a situation where everybody says, here's my crystal ball. I see 25% electric cars in 2025. At the automobile companies, my last statement, here's what they do. They say, when's my retirement date? 2024, sir. All right, we'll make the announcement about the 2025 deliveries then. Okay. Do you know that Honda predicted when I was just in my early 70s that they would be all electric by 2018? I don't have my calendar handy, but that chairman retired last year. Is that interesting? So be careful, because these raw materials are not the be-all and end-all of automotive manufacturing. They're part of the powertrain. If you can't get them, you don't make the car.
Vivian, I was going to ask you for some comments
Yeah,
on
I mean,
that.
that's a great point. So Daimler as a whole, obviously, we're building 4 or 5 battery plants. And then on top of that, about a month ago, we announced the exit of the residential energy storage market because we don't have access to batteries. The business looked at it, and we went back to the business and we said, you know, we need $100 million of batteries for these applications. They came back and said, well, we don't have access to batteries. So they pulled out of that. And that's what I was saying before, like there's a shortage in the battery module business. And if you take a look at it, and so is like the supply and demand equation, it's like where ultimately are all these commodities going to go into is going to feed into cathode and anode plants. So if you look at CATL, who's going to be the soon-to-be largest Chinese battery manufacturer, they want to do 50 gigawatt hours and then go up to 100 gigawatts, which is 50 gigawatt, correct me if I'm wrong, but 50 gigawatt hours would probably be about 1 million vehicles, electric vehicles at about 60 kilowatt hours a piece, give or take some. So even at 100 gigawatt hours, and right now, CATL is at 7 gigawatt hours. So to go from 7 to 100, I mean, they need to be investing, they need to be building massive plants around the world right now, which is not happening. So ultimately, there's not enough, and you want to do all these batteries, as you were just saying, you want to build all these electric vehicles. Well, the battery plants aren't even in place yet, and the investment's not even in place yet. And the companies that are supposed to be building these plants don't even have the capital yet to build the plants. So, you know, and then how long is it going to take? And then at the other side of it, which is more what I'm involved in, is like the state of California last week just announced $750 million on the EV charging. New York, New Jersey, $250 million each. Like that's just being announced today, right? So like, how do you go and take that? And if you look at it and you say, like, how do you actually get electric vehicles into this area right here? Like, you know, this location where we are right now needs electric vehicles because near ground, you know, low level ground emissions are very high. So you need to be able to bring that in. And then you look around, it's like, well, how will people actually charge electric vehicles in these major city centers? So when you know, it's nice to go and fantasize about what's going to happen and how big the market is, but when you're actually working in the business and you're taking a look at it, there's a lot of challenges that still need to be overcome, and a lot of capital still needs to be deployed. And I personally don't see that capital being deployed today to support a mass electrification rollout in the next 5 years or so. So I think it's going to be a gradual build out. Going back to the original point though on the cobalt thing, I'm not so excited about cobalt. I think lithium for sure, very bullish on lithium. Cobalt is a short-term play, and then eventually cobalt goes away. You have, if you look at the automotive business, the hybrid space right now, you still have Toyota, which is doing the vast majority of the global manufacturing capacity, and they're still using the old, they're not even using lithium battery. They're still using
Nickel metal hydride.
Yeah, exactly.
It's a fabulous battery. It uses a lot of our material.
Exactly. So they're still doing, right now, they had an announcement out about 2 months ago that they're building another battery plant in I don't know, Thailand or something like this, which is going to house another 100,000 batteries sets. And then their Japanese plant, which is the old I forget the name for it, it's the old North American plant, but that's 100,000 as well. So Toyota does 1 million hybrid vehicles a year, and only 200,000 by 2020 are going to be lithium. So there's not even that conversion. And then Toyota's actually delaying it all, and yes, they're investing very deeply into the Olaroz basin in South America, but they're, out of their 1 million electric vehicles, only 200,000 by 2020 are going to be hybrid, right? So like Toyota's really looking at this in a long-term perspective. And then the other thing is you keep reading the headlines that they're investing into the next generation battery technologies. So, you know, you really question if Toyota's ever going to need that cobalt. Take a step back again and you look at the stationary energy storage market, and you have BYD, which controls 50% of the market. You have Sony just sold their asset to Moretta, and all of that's lithium iron phosphate. So 50% of that market doesn't even use cobalt, right? Sonnen Battery, who's the largest residential system integrator, uses the Sony technology, which is lithium iron phosphate, LFP. And then the other side of it is you have the electric. So if you did a study, and I looked at all the big Chinese battery manufacturers just to figure out what's happening with this cobalt situation, and CATL, BYD, and Gosheng New Energy, and China Aviation Battery, CALB, are all using lithium iron phosphate. So, you know, if you want to invest in cobalt, what you're really saying is you're not playing the new energy technologies, you're playing the consumer component of it, and you're playing a specific battery chemistry. You're not playing the new cobalt. In my opinion, is not a new energy vehicle metal. It's just the type of battery within that segment. If you want to play the new energy metals, new energy technology space, you invest in lithium. You don't invest in cobalt. And then the other thing that's happening is if you're investing in cobalt, you're essentially betting against technology. So this year, 2007, or last year, 2017, we've seen the Powerwall, which is the residential product out of Tesla, go up from $500 to $550, or $5,000, from $5,000 up to $5,500. And that was primarily related to A, Tesla's margins, but B, cobalt pricing. So, and then you look at the LG Chem, their Resu product, they're stackable products for the utility scale markets. And all of that, all the pricing has gone up on the LG Chem product over the past 12 months, along with the Tesla Powerwall and the Power Packs. That is because of cobalt pricing and obviously margins and other factors. But the overall thing is like, do you think that LG Chem is going to jeopardize billions of dollars in investments because of one raw material? And is Tesla going to jeopardize their entire supply chain and their future because of one raw material? So then what happens obviously is Daimler comes out and they say we're investing in this next generation and we're going to take cobalt out of it, and the other companies are doing the same thing. But taking a step back and actually looking at the Chinese don't even use cobalt. And they have electric buses, electric trucks, electric vehicles. BYD builds their own forklifts for material handling purposes, and none of that has cobalt in it. So I just don't see the long-term play.
Can I make a comment?
It's interesting. Yeah, please, Jack.
The Los Angeles Times last week had a very long article about BYD's buses in Southern California. Did you see that? So they all failed and have been taken out of service for two reasons. One, technical word, crappy construction, no quality control, and the batteries failed, the lithium iron phosphate. I'm not knocking lithium iron phosphate. The Chinese use it because it's cheap, and for short range or even high capacity in a city setting, it's quite good. Okay, but in rushing over to America with Warren Buffett's imprimatur, they failed. And for the Los Angeles Times to say this technology was way too early is quite. Los Angeles Times is most liberal paper west of the Hudson, and so I was shocked because normally anything about batteries is wonderful no matter what, and I was quite surprised at the fact that BYD's quality was poor. And for example, they took a bus, tried to go up a hill, it drained the battery. A hill, gone. Okay, luckily the bus had brakes. Okay, so demand is also individual market driven. In China, there's big demand for this, and it's going forward. In the United States, I doubt that any municipality will look at these buses now until it's been. So this is not just a smooth ride, okay? And I agree with you about cobalt is probably peaked. Anybody here know what cobalt sold for in 1980, except me? Okay, it was $80 a kilo. You know what that is now? $300. Cobalt's way underpriced, right? You know how long that lasted? About a week. But I remember it because the automobile industry switched over from iron magnets to samarium cobalt. The cobalt market said, aha, we've got a live one. Boom, they started raising the price. Next year, they went to neodymium iron boron and never turned their back. That was it. $300 a pound, today's price. Keep that in mind.
Okay, some interesting commentary there, very interesting views. But I'd like to open up to the floor while we still have a few minutes left. If anyone has any questions that they would like to pose to our panelists at all, if you just raise your hand and we can take any questions. Okay, we'll have one down here.
For the used battery, I don't know those kind of things is going to be waste or simply could it be reused or recycled. Anyone know this? I don't know much about this. Whatever lithium ion, so whatever the battery, when you, let's say, really get it back, what are you going to do with it?
Chris, you were mentioning recycling when we were outside.
Yeah,
before.
recycling is, I think, starting to get more press because of this issue. I mean, you can't have millions of these batteries out there. I think, at least in Europe and Livia, you can probably add a lot of value here as well. But in Europe, I think the powers that be are looking at the OEMs and saying, hey, at the end of life, these batteries are your problem. So they'll either get repurposed into what are known as secondary life batteries into the energy storage business, or you've got a company like Umicore or a number of companies inside China that are involved in lithium-ion battery recycling. The challenge has always been economics up to this point. You know, with lithium at, say, $6,500 a ton for battery-grade material and cobalt at a much lower price, it didn't make sense to recycle them because it was all about economics. And now that calculus has started to change somewhat, but it's very much kind of a moving target depending upon whether or not you're in Europe or China or here in the United States. I don't know, Livio, you have any ideas?
Yeah, second life batteries, obviously, I mean, that's probably a good area to invest in. But I think what happens is, as obviously more EVs come off the road, then those are going to land into gigawatt-hour scale energy storage systems. So let's say you have a solar farm that's 1 gigawatt-hour. They might put half a gigawatt-hour of battery capacity next to it. Seems to be like a low-cost. It's a good opportunity for the batteries. And then the other thing as well is when you're looking at degradation of the battery, so you generally start off on day one at 100%. So let's say you bought a 100 kilowatt-hour vehicle. It's pretty high, but let's say 100 kilowatt-hour. The NMC batteries, after about 3 years, would get you down to about 80%, give or take some. And then that's when they would come off of the release and leave the market. So you still have a lot of battery capacity available in there. It's just not ideal for its primary application. So you find some other home for it. So there's going to be a flood of second life batteries coming into play over the next decade.
Okay. Any more thoughts on recycling? No?
Yeah, look, I've been looking at this space for about 20 years. Every time I've approached anyone on financing, and I get the same answer. Have you got the feedstock at a price where you can make money on the finished goods? No. Okay, thank you. That is still the case because the controlling factor here is the scrap industry. And these guys are not known for generosity. So they read the papers just as you do. And if lithium prices are up, they say, well, I've got to get a lot more for this scrap. Okay, it doesn't work. Umicore can do it because it's a tiny, tiny part of their business. They just throw everything in that big smelter and see what happens. Okay, this as a freestanding business, the recycling of batteries is not at this time, automobile is not at this time profitable. I don't see it.
Okay. Any further questions from the audience? There's one down here, please.
Murthy, maybe thoughts on vanadium potential and redox flow batteries? And then for anybody, why aren't the OEMs going, what's stopping them from going further downstream? I know we have the Tesla partnering with a miner in Australia, but there's really been no news there. Why not just go all the way to the ground?
So, about vanadium redox, basically it depends on the availability of raw material. It's only available in a few countries like South Africa or Canada. And you got to have the material out there. It's good for stationary storage facilities, but it's obviously not relevant for electric vehicles.
I would like to talk a little bit about the supply chain and the ability for suppliers like us to contract at various stages through the supply chain. So, for example, with rare earths going into the automotive industry, comes out of the mine, it gets separated, goes to a metal maker, an alloy maker, a magnet maker, a component maker, and finally to the OEM. And it's much the same with electronics as well. So to backward integrate for an OEM is actually much more complex than simply saying I'm going to put my paw on the resource itself. And this, in fact, is a big issue for America in terms of critical metals, which everyone likes to talk about, you know, sort of having some level of controversy. It's not just about having access to the raw material out of the ground. American industry has been disintermediated completely in the interim steps. And unless there is a supply chain rebuilt in those areas, the vulnerability that American industry has to the critical metals will remain. And so, having said that, from our side, our core commercial strategy at present is to engage and to write long-term contracts directly with tier one suppliers and OEMs, because the adoption of the technology is not stopped for technical reasons at present. It is stopped for concerns about reliability of supply and predictability of price. For us, given that we are now a well-established company, we have absolute control of our costs, we understand our cost base, we will happily contract for 5 and 10-year programs, because OEMs want contracts which go for the life of the platform. And we will write contracts either on a fixed price basis, they tend to be a little shorter, maybe 2 or 3 years, on a floor ceiling basis, and also we will write contracts which actually might be quarterly or annual contracts as well. And because suppliers like us are prepared to do that, is the reason why the OEMs don't actually have to get their hands dirty with being miners.
Okay. I'm
Can I
sorry,
just
Olivia,
make
you
a
wanna
comment
add?
on the vanadium side of it? So, my background before I did this residential and stationary stuff, I was in power electronics. So I was with a Canadian inverter manufacturer, and we went out and did a lot of deals with next generation and flow battery technologies. Essentially, and I have many people that come to me and say, hey, what's the risk to lithium, right? So like, what's vanadium and what's happening with this copper battery and all this good stuff? That's fine. But ultimately, when you boil it down, if you're investing in vanadium, or if you think vanadium has this big future, as many people do, and there's a lot of noise being that it's an energy metal, I did a market analysis, and right now under a contract, there's 4 gigawatt hours around the world of utility scale projects. 97% of that is lithium. So vanadium flow batteries are simply not going to be able to keep up to the cost decrease of lithium battery technologies. There's massive capacity coming online. And then on top of that, how is vanadium going to compete against literally millions upon millions of used electric vehicle batteries that are coming out of the market? The other thing about vanadium is that there's no expertise in it, like there's no one's permitted it. There's less than, I think, like 250 installed systems around the world. And a lot of these companies are just like penny stock. So when you go out and do a deal with utility, the utility is going to say, well, like, what's your track record, right? Like, okay, well, we're LG Chem or we're Mercedes. They'll buy into that. And many people think the utilities are just going to invest hundreds of millions of dollars into these vanadium flow batteries. Like, a utility is an investor-run business. It's not a research and development company. So that's what people don't understand. People don't think about it logically. They're just like, oh, you need these big battery flow batteries beside these solar parks. Like, that's the most high-level thinking possible. And if you just reason, you simply quickly eliminate vanadium as an option going forward. Yes, there will be some spot for it, but they'll probably eventually will just go away. The other thing is that the vanadium flow batteries' primary uses is energy storage, which is a very small market. Collectively, the global market was only 3 gigawatt hours at the end of 2017. Like, how can anyone build a business off of that? Where lithium, its primary applications are consumer products and also mobile, like electric vehicles and all this good stuff. So I just don't really see vanadium like playing that much of a role in the energy landscape.
Okay, fantastic. Look, we've reached the end of our time here, but I just wanted to very quickly ask all of our panelists if they had to select a battery metal or commodity of choice to invest in, or that they think could be the next hot metal or still currently. Just if you could give us quickly your views.
The next one, geez, I'd stick with lithium.
Definitely not cobalt, but yeah, lithium probably has life for the next 3-4 years at least. After that, we'll have to see how much of new capacity comes up and what other new technologies come up replacing some of these existing battery materials.
You would not be surprised.
Of course.
I would say, if you want a de-risked investment, invest in a business which already exists with exposure to growth, rather than investing in a business which might exist sometime in the future. So rare earths go into automotive industry today. They're growing, so invest in us. And we actually run a really good company.
Jack?
No matter what you do, make sure you've got something in copper in your portfolio. It's the most important metal in our world. We build things out of steel, we connect them with copper.
I'm in lithium and low-cost brine out of Olaroz, Cachari Basin in South America. So companies like Orocobre and lithium or Vantage Lithium.
Fantastic. There you have it. So could we have a round of applause for our panel, please?